Are we about to face another global recession? That's the big question on everyone's mind. Economists, business owners, workers, and everyday people like you and me. The word recession sounds scary, and for good reason. It often means job losses, falling incomes, rising prices, and financial stress for millions of people around the world. But what exactly is going on in the global economy right now? Are we truly on the edge of a major crisis? Or are we just being cautious after recent global shocks? Let's break it down together, clearly, simply, and step by step. What is a recession? Before we jump into the current situation, it's important to understand what a recession really means. A recession happens when a country's economy shrinks for at least 2 quarters, 6 months, in a row. This means businesses stop growing, people lose jobs, companies stop investing, and the overall money flow in the economy slows down. In short, it's a period of economic pain. Recessions can happen for many reasons: wars, high inflation, falling consumer confidence, high interest rates, or global events like a pandemic. Sometimes, it's a mix of several problems at once. The world after COVID-19. The last major global shock was the COVID-19 pandemic. In 2020, countries all over the world shut down. Businesses closed, people stayed home, and economies froze. Governments stepped in to help by giving money to people and lowering interest rates to encourage spending. By 2021 and 2022, things started to recover. But the effects of the pandemic are still with us. Supply chains are still not fully fixed. Prices of goods have gone up, and many businesses are still struggling. Inflation, the invisible enemy. One of the biggest problems the world is facing now is inflation. Inflation means the prices of things we buy every day, like food, fuel, rent, go up. A little inflation is normal, but since the pandemic, prices have been rising too fast in many countries. Why? There are a few reasons. Demand increased after lockdowns ended. Supply chains couldn't keep up. The war in Ukraine disrupted energy and food supply. Central banks printed a lot of money during COVID. All of this led to high inflation. In response, central banks, like the US Federal Reserve or the European Central Bank, started increasing interest rates to control inflation. Higher interest rates make borrowing more expensive. This means people spend less and businesses slow down. While this helps reduce inflation, it also risks pushing the economy into recession. High interest rates equals slower economy. As interest rates keep rising, many businesses are finding it hard to grow. They don't want to borrow money to invest in new projects or hire more people because loans are expensive. People are also spending less because credit cards, home loans, and car loans cost more. As a result, some major economies are slowing down. In the US, growth is slowing, and there are signs of weakening consumer demand. In the UK and parts of Europe, inflation is still high, and economic activity is flat. China, one of the world's biggest economies, is also facing slower growth due to internal challenges like a property crisis and low consumer spending. Global trade is suffering. Another sign that points toward a recession threat is declining global trade. When countries trade less with each other, it usually means that consumers and companies are buying less. Shipping activity has fallen. Ports that were once too busy now have fewer containers moving in and out. This is a strong signal that businesses and consumers are pulling back. Layoffs and job market uncertainty. One of the most painful effects of a recession is job loss. And sadly, we are already seeing signs of this. Big companies like Amazon, Google, and Meta have announced massive layoffs over the past year. Some banks and factories are also cutting workers. These job cuts don't just hurt the people who lose their jobs, they also scare other workers, who then spend less money out of fear. A slowdown in the job market is often one of the strongest signs that a recession could be near. Developing countries are struggling. While rich countries are dealing with inflation and high interest rates, developing countries are facing even tougher problems. Many of them took loans from international lenders during the pandemic. Now, with high interest rates and a strong US dollar, it's harder for them to repay their debt. Countries like Sri Lanka, Pakistan, and Argentina have already seen major economic problems. A global recession would hit these countries even harder. It could mean more poverty, more unemployment, and even political unrest. The role of geopolitics. Geopolitical issues also add fuel to the fire. The ongoing war between Russia and Ukraine is still creating instability in energy and food prices. The rising tensions between the US and China are affecting global trade and investment decisions. Conflicts in the Middle East can raise oil prices and shake financial markets. These tensions create uncertainty, which makes investors nervous. And when investors are nervous, they often stop investing or pull their money out of markets, leading to slower growth. Are we really on the brink? So, with all of these issues, high inflation, rising interest rates, falling trade, slowing growth, job losses, and geopolitical risks, are we truly heading into a recession? The honest answer is, we might be. Many economists say a mild global recession could happen in 2025, especially if central banks don't lower interest rates soon. Some regions, like Europe or parts of Asia, may already be in one or very close. But there is some good news too. Reasons for hope. Not everything is dark. There are a few reasons to remain hopeful. 1. Technology is still growing. Industries like AI, clean energy, and healthcare are still growing fast. 2. Governments are prepared. Most governments have learned from past crises and are ready to act if needed. 3. Job markets are still holding in some countries. In the US and Canada, for example, job markets are still fairly strong. 4. Consumers are adapting. People are becoming smarter with money, learning to save more and spend wisely. Recession is not a guarantee. It's a risk. And by staying aware and making smart choices, we can all be better prepared. What can you do? If you're wondering what you can do during uncertain times like this, here are some simple steps. Spend wisely. Cut back on unnecessary expenses and save where you can. Build an emergency fund. Try to save at least 3 to 6 months' worth of expenses. Avoid big loans. If possible, wait before taking out large loans for homes, cars, or businesses. Learn new skills. The job market is changing. The more skills you have, the safer you are. Stay informed. Follow financial news, but don't panic. Knowledge is power. We don't know for sure if a global recession is just around the corner, but the warning signs are clear enough that we should all pay attention. The world has faced many tough times before, and each time it has recovered. What matters most is how we respond to the challenges. By staying calm, smart, and prepared, we can ride out the storm together. So the next time you hear someone ask, "Are we on the brink of a global recession?" you'll know what to say. Maybe, but we're watching, we're learning, and we're ready.